Hello traders. If I may ask, what is the real concept of support and resistance in technical analysis? You might say support is for the bulls while resistance is for the bears, which is the acceptance of 90 to 95% of the global financial traders. At Trading Soil, we believe support and resistance needs to be based on the trend direction. If the market is uptrend, our resistance level will be at the last higher low point of the uptrend, while our support level will be at the last higher high point of the uptrend. And if the market is downtrend, which is the bears market, our resistance level will be at the last higher low point of the downtrend, while our support level will be at the last lower low point of the downtrend. Do not mistake the position of the bulls and the bears in the financial markets to be your support and resistance. The bulls are traders who are speculating that price will go up, while the bears are traders who are speculating that price will go down. But support and resistance is far more than that, which is based on the scale of volumes of interest. And as you know, you must not trade against the trend. Why? Because the retail traders don't have the volume of finance it takes to move the market. So we want to be on the side of the highest volume of interest, either the bulls or the bears. Our interest is based on the scale of interest. When the market is uptrend, it means the volume of investment made by the speculators that believe price will go up is greater than the volume of investment made by speculators that believe price will go down. At this phase, our resistance level will be at the point of interest, where the bulls step in to resist or stop the bears from moving the price down. Due to the greater volume of investment made by the bulls against the bears, price will continue to go up, breaking the previous high of the uptrend, which makes the previous high weak to be resistance, and it becomes bearish support level, and the low become bullish resistance level of uptrend. And when the market is downtrend, it means the volume of investment made by the speculators that believe price will go down is greater than the volume of investment made by the speculators that believe price will go up. At this phase, our resistance level would be at the point of interest, where the bears step in with volumes of cash flow to resist or stop the bulls from moving the price up. Price will then continue to move to the downside, breaking the previous low of the downtrend to make it weak to be resistant, and it will be called the support of the bulls, while the up level will become the resistance of the bears. If you understand this concept and it is clear to you, I would like you to follow this page, as we are going to be dropping more of this analysis on a daily basis. Thank you. I will see you in the next one.